Hello friends, welcome to Sign YouTube channel. In this video, we are going to see what are the things to look for before getting a mortgage from a bank. Fundamentally, it's about getting a mortgage. It's about finding a good rate which you can afford and is competitive enough to be able to make all the payments. It's about finding out if there are any hidden fees or charges and what they are. It's about finding out what sort of support services are available from the lender and from the mortgage provider, like property management, legal advice, home insurance, etc. The only way to do all this is to ask someone who has done it before, someone who knows what they are doing and how best to get a mortgage. That is, someone who has done it before. You can do this by reading reviews online or by going to your local NAB or Bank of Queensland branch, depending on the bank, and asking questions like, can I borrow dollar XYZ? How long has it taken and what are the terms? What advice have you given me? Have you ever had problems with loan officer? How long has it taken? How much did I pay in fees, interest? Can I get more information, help elsewhere? Can I get insurance from another source, preferably from one of your competitors instead? Once you know what you need to know and have made up your mind about things, then you can start looking for a mortgage and comparing lenders. You can also use our site as a starting point for doing that comparison shopping. However, remember that after making your decision on which lender to go with, you will still need to read their reviews too, so don't forget that. Things to look for before getting a mortgage from a bank. The most important question I get is, what kind of mortgage am I going to get? It's a good question and one that can't possibly be answered in an instant. I went to the bank myself and had to be armed with a very limited set of information. I had to be able to demonstrate that my credit was strong enough to qualify for a mortgage, which meant no credit checks. I had to have an income above the maximum allowed by the bank. The maximum income is $30,000 per year. I had to have enough assets available for the down payment. The bank doesn't like people without assets beyond their minimum. So, what do? We start with a few things. We narrow our search by looking at different credit scores and ratios. We look at our net worth and make sure it doesn't exceed $250,000. We take a look at how much debt we are carrying. We look at what kind of financing we will want for the down payment and whether or not we can afford it. 1, 2, and 3 are pretty straightforward and easy to answer, but 4 is not so much. We need some information about 1, 2, 3 because these things determine who should qualify. But 4 is lot more difficult. It's really hard to say what kind of mortgage you should get until you know what kind of debt you have and how much is debt you have. But sometimes it's helpful to know what kind of debt you have before you decided which type of loan works best for you. If someone offered me $500,000 worth of student loan, knowing what I didn't have any student loan and no job prospects whatsoever, I would ask them why. Because they wouldn't be able to market themselves effectively as debtors who can't afford pay student loans. So they would need something else besides that. In order for me or anyone else outside their circle of students or family members to understand that they were financially capable enough for such large amounts on their own. How to tell if your bank is good? It's interesting to look at the following list and see how many of them are applicable. If your bank does not fit this list, then you need to do some rethinking. Bank of Bank of America claims to be the dominant bank in the US market. In fact, if you look at the numbers, they are as good as that can be for a major bank. It is before it is after all a large company. They have a near perfect balance sheet and very good asset quality. Their understanding loans have very low difficult rates. Their fees are reasonable. Their non-interest income is low relative to their overall operating expenses, and their customer service is almost always excellent. But when it comes down to things like customer loyalty and total revenue, they fall short in many areas. That is, things like service satisfaction. This is a problem because we often want credit cards with very high rewards options and very low fees, especially on premium products. But these banks can't offer those due to their under appreciation of the value of those rewards programs compared to other banks. And conversely, they can still offer them because they have so many more attractive products. Bank of America claims to be the dominant bank in the US market. In fact, you look at the numbers, they are as good as they can be for a major bank. It is, after all, a large company. They have a near perfect balance sheet and good asset quality. Their understanding loans have very difficult rates. Their fees are reasonable. Their non-interest income is low related to all operating system, and their customer service also always excellent. But when it comes to things like customer loyalty and satisfaction, because this one credit card with higher rewards option and low fees, but these banks can't offer those due to their under appreciation. Where to get a mortgage from? Where to get a mortgage is not a simple question. It involves many factors, all of which can be improved upon with some practice and planning. I'd like to go over the major ones for two reasons. It helps me think about them more in depth, and second one is it's easy to show how they all interact with each other, and so you can get a picture of how they work together as a whole. The first thing I'd like to point out is that there are only three types of mortgages: fixed rate, variable rate, and adjustable rate. The first two are pretty straightforward, the later requires some extra thought. Fixed rate and variable rate mortgage. The most important type of mortgage is fixed rate as opposed to variable rates. You get what you pay for. It's just a higher interest rate than you might otherwise have paid. If you go into this knowing this, then the decision to take on a fixed rate mortgage is likely already taken. Most people will have one or more fixed rate mortgages when they start their second or third job, and if your employer pays for the rent for the first 2 years after the start you first one, and also a very high interest rate, then you should definitely consider taking out a fixed rate loan which will allow you to pay down your student debt quicker. A few things need to be considered through when deciding whether or not to take on fixed rate loans. It's unlikely that an interest rate as low as 3% will be available for 1 year at most, so don't expect weekend rates. Second, the annual percentage yield APY is now 3.2%, which means that if you take out a mortgage at 5%, it will earn less than $1,000 per year. Third, if your payments are four times higher than your income, then it could make sense. If your income increases significantly after taking on that loan, say by 15%, then something may have changed in the terms of the nature of your business, which makes taking on more debt desirable and includes things such as startup debt. Five, while there are microloans available from banks like my friend Robin Hosley has done several times already, I generally advise against them because they require too much upfront spending effort and time investment. Though with relative low APYs, they can be worthwhile if achieved without too much hassle. Best practices for personal finance management. So you are finally ready to take the plunge and acquire your mortgage. You have tried to find a great deal on an online broker, but it seems like there are just too many financial institutes out there. So you settle on one that is fairly well known and has been around for a while. You visit their website and set up an account and start looking for property that fits your needs. How did you decide on this bank? What were you looking for in a mortgage? What was your first meeting like? How was the process of applying for the loan? How long did it take to get your money? Were there any surprises along the way? Was it worth waiting until the end of the application process, or could you have started earlier? It is important to learn from mistakes. If someone can't answer these questions, then they either aren't very experienced in personal finance management or are not as qualified as they might think. Here are some things that would be important for you to know before getting a mortgage from a bank.